Gary just gave us a quick economy update. It's really hard for anyone to argue the economy is falling apart, with GDP growth averaging 2 to 3% for 6 quarters in a row now, and inflation continuing to moderate. As an investor, I certainly like this. And I especially like low inflation because that means the interest rates are more likely to go down. And when that happens, growth stocks, they go up, and Tesla stock is one of them. Gary's not shying away from sticking to his buyback position, with Tesla again building up cash at a stupid rate. And these are some strong words that you don't really see often from Gary. $29 billion at 2023 year end, with predictions cash could hit $150 billion by 2030, and Tesla in between two major growth waves. I'll ask again, why doesn't Tesla distribute some of its unneeded cash, $10 billion over 3 years, back to shareholders? All of Tesla's tech competitors are returning cash to shareholders. It's the sensible thing to do rather than let cash build up unchecked at 4 to 5% ROIs. I think Gary's point makes sense if Tesla stock is less than 10% of your stock portfolio. But if it's a substantial amount, like in my case, it's 100% of my stock portfolio, in that case, you have to think about risk. Okay, if something really bad happens to Tesla and now it just spent all of its money or a large portion of it on buybacks, and there's a recession now and the stock plummeted, you cannot really just raise more money because maybe also the interest rates are now really high. So what are you going to do? You're just not going to grow, and you're just not going to invest money or as much money as would have been needed into whatever pickle you got yourself into because of extremely tough economical times if we encounter a huge, massive, unexpected recession. And Elon Musk is not really diversified with his wealth. He is more now compared to before, but still, so much of his wealth is in Tesla stock. And therefore, I think he wants to play it a little bit safe with the buybacks and the cash position that Tesla has. But I certainly understand Gary's position. Gary is a fund manager and he does want good performance short term, and he has many stock holdings. So if Tesla stock somehow did not do well because it spent too much money on buybacks, it wouldn't really matter to him. But I will let Elon Musk make the decision whether Tesla should do a buyback or not. Obviously, he has insider information and he knows Tesla's plans better than anyone else in this world because he's in charge of these plans. So if he's not doing a buyback, I think there's a reason for it. And in this regard, at least my incentives and Elon's incentives when it comes to Tesla doing buybacks, our interests are perfectly aligned. Elon would greatly benefit from Tesla stock going up in the long term. So if that really was helpful, he would certainly do it. If he thought this is the best decision for Tesla stock in the long run. However, Gary Black does make a pretty decent point here. One last thought about Tesla doing buybacks. If the Tesla board combined a new 2024 CEO compensation plan with a multi-year $50 billion buyback, let's say $250 per share, which would be equal to 200 million shares, the shares denominator could shrink by 6%, making it easier for Elon Musk to get to 25% ownership.